Hello and welcome to our daily Forex market review. My name is Schimming, and this review is for Thursday, February 14th. Happy Valentine's Day. As always, I'm starting with my currency strength index, and I want to point out the fact that what we have been discussing and what we have been anticipating is in fact coming to pass. We talked about on Tuesday the event in the yen that shot the yen up, which was significant. I think is showing, I believe that my assumption is somewhat correct, if not totally correct. And we may, at least on the short term, be seeing an end to the downside in the yen. It's a very attractive situation, and let's look at this on the CCYX. Pick out the yen in the light blue. And you can see that even though, as typical, it got a very slow start, once it started moving to the upside as the tail end of the Tokyo market section and going into the London Open and beyond, you can see that the yen has been rising with the greatest strength and now has achieved the highest level on the currency strength index. So when we're looking at that, what is moving to the downside? What is opposing it? What's moving up? What's moving down? And what's not moving, as I say to you each day? You can also see that the dollar has shown some strength, the CAD, and the New Zealand. Now you can tell that New Zealand, once the London markets open, had made its move and it really has been declining and moving sideways. And there's really no trading range there. Same thing with the CAD pairs. CAD pairs right now are not in play as far as I'm concerned. So the dollar and the yen to the upside, and then what's moving to the downside? You can see that the Swiss and the euro, Swiss in white and the euro down here in red at the very bottom, those are the two moving with the greatest amount of weakness and showing the most down potential in the marketplace. Now right now the Swiss is still moving down, and we can see that the euro looks like it's bottomed out. It was a little lower. It's around a minus 90. It was a little bit lower than that. It was 95 at minus 95 at one time. And then in the middle you can see that the Aussie relatively flat and the pound also relatively flat. Both have tried to do a little something but have failed to achieve any significant results. So our natural pairings, and let's just clean up this chart a little bit. We'll go over to at the bottom right hand or left hand corner, and let's go ahead and take some of the other currencies out. We'll get rid of the CAD, we'll get rid of that Aussie, we'll get rid of the New Zealand, and we'll get rid of the pound. And then let's clean up this chart and just take it down to the four that we want to focus on today. And again, looking at the yen being the most significant to the upside and the euro being the most significant to the downside, and then obviously the euro yen has had the greatest average trading range. Its 30-day average daily trading range is over 200 pips, just right at 200 pips, and it's been trading at about 240 to 250 pips per day average over the last 5 to 10 days. This does create a significant opportunity, and because it's made that huge rise, and we saw that event on Tuesday, something's going on, and so we've been following along on this yen pair for quite some time. So natural pairings. It doesn't have to be just the euro yen. Today, if you look at the market, the yen moving up and the dollar moving up and the Swiss and the euro moving down. So we could look at the euro dollar and the euro yen, both short. We could look at the Swiss yen, also short, probably a better short than the euro yen right now. And then you also have the dollar Swiss, that would be a long because the dollar's strength and the Swiss's weakness. It's a very simple way that we use this overview tool of the CCYX and allow ourselves to know that we are focusing on the best situations of the day, taking our short list, the pairs we prefer to trade, and determining of those pairs which ones should we be focused on today. We probably have a bias with the yen anyway, the euro yen anyway, and the yen pairs in general because of trading range and opportunities. So let's look at our broader view, and this is looking back. This is that chart I've been bringing up each day. I'm only going to go back to like early November. I don't think we have to go back any further than that and get to that just so you can see the bottom, the trend line, the basis of its formation coming off of this trade low back here at the start of November. And then you can see, and you can go back 6 months and you can keep taking this thing further back. Go back 6-7 months. You can see, most of you are well aware that the euro yen has been moving to the upside, consolidating, lifting out of it with a breakout, consolidating, lifting out higher, making a move, consolidating, lifting out again with a breakout, consolidating, and has made quite the move over the last 6 or 7 months. That event may be over. What the uptrend line, and I've been pointing this out to you each day, is what was support has now become resistance because we've traded below it. We put in that 1, 2, 3 top. It had divergence. It looks like a double top, triple top, head and shoulders. It's the 1, 2, 3 that I think is the most significant because it was teamed with divergence. Now we've broken it below the trend line, and we're back to the lowest end of this transitional point. Now the difference between a transition and consolidation again is the fact that the transitions are more significant, much broader trading ranges. You know, this first transition that we saw that was kind of the warning, even though it still set a higher low and a higher high and came out of it. This is a significant drawdown because we went from being at over 120 and down closer to 116. It's nearly a 400-point retracement. That's more than just a consolidation. That is a transition. That is traders betting against, the sellers coming in and betting against the pair's ability to keep going higher. It just wasn't ready to end yet. Even I was suggesting and saying, look, this is getting toppy. It may be running out of oxygen. I don't think it's done, but the signs are there. And they were there. It just had decided to sprint up a little bit further before it really ran into some objections or into some selling. So as we blow that up, and let's go to the other chart because I've got those more significant levels marked, and you can see 128, 126, and 125. We've got all these levels marked. I've got 128 up here, and I've got it boxed in because I want you to see that transitional period. But then I've got the figures all marked, and you can see how 124 had support. You can see how 122, 120, 118. I think those are the, if we come out of this to the downside, you can tell, you could almost want this thing to break down, because if it comes down below the 124 and ultimately this low trade in here, which is 123.50 range, give or take, 123.42 was the lowest, I believe, at least on based on our spreads. So below there, we can see significant areas of support. 122, that 120 again, the 118, even lower. We get down over here to 116. Almost like every 200 pips, we're getting into some significant, what would become significant support, which is a great opportunity. As opposed to getting over the 128 range and being in uncharted territory and obviously running out of oxygen. Now, I'm not saying that it can't go up. It absolutely can. It's not my job to predict. Remember, it's your job to look at the possibilities, anticipate, and then react to the reality of what's happening. Sounds easy. Most traders are too busy trying to predict and forecast to actually notice what's going on. What I'm trying to do is point out what I think is obvious so that you can anticipate it and you can react properly. Again, not trying to predict. There are definitely two sides of this coin, but I'm going to have a bias. I know what I would prefer to see, and I think that significant event on Tuesday says a lot, says a whole lot. So from that high move, this is showing the tail end of that 1, 2, 3. I've got point number 3. I put the little triangle down the 1, 2, 3 so you can see that. That's not as important to me, although I wanted you to see it on the screen. What's happening since then? Here's the divergence. You can see the tail end of the divergence indication. If I scoot it over again, you can go back to prior videos and see that in a much greater detail. We're beyond that. It still has to be in our view. It still has to be in our memory. It's still a significant event. The drawdown from there, this was a 430 point pullback, because we went from 127.70 down to that 123.42. So we had a decline of about 430 pips. That is significant. But you can see, here's our low, here's a new low, here's our lower still. This is the lowest move. Remember, I'm looking at a noise-free charting environment. I'm looking at pure price. We don't have as many tails and wicks. All the bars are an equal length in this methodology that I utilize. And so the tails and wicks become much more significant. There's less of them. So when they show, we know that there is more significance in here. So at the tops and bottoms of moves, we start to see tails and wicks because it's whipping around and really is reaching for price. So this becomes pretty significant that we have these 3 low moves and those 3 tails. And look at the oscillator. You can see clear divergence between the lows being set in the pair and then looking below you can see, whoops, my cursor moving around, you can see the divergence that was setting up. So from that divergence and from this basing coming down that low end of that range, remember 124, it violated it a little bit, and I've got that marked. Horizontal lines here, the yellow lines are again at 126, 125, 124, and the 123.50 range. Actually 127, 126, 125, 124, then 123.50 to mark the low. Remember, above this, sky's the limit. We don't, it's uncharted ground. I could put the line up there at that 70, and we would if we were looking at the top, but we're talking about this thing being at the low end. Now, of course, sitting at 124, what was the trade yesterday? I told you the trade I took yesterday was shorting it when it was breaking 126. My short was at 126.02. It was a fantastic trade. I even left pips on the table. It could have been an outstanding trade, but it didn't matter. I achieved my goal, and what I was expecting to take from the pair meant to leave some of it on, quite frankly, and didn't do it, but it doesn't matter. I'm still having an outstanding week trading this pair. So today was also short trades. One was trading it to the 124 level as it came below S1, taking a trade here after it came up and tested on this and moved lower. I shorted a little late. I think most of the traders in the room were in a little bit higher than me. I was at the lowest point at 124.41, but it did trade down to the figure, and that's a significant event. Went to the well again because it looked like it wanted to go through today. Took a short at 124.05. Only got out with 2 pips there because it broke below a couple of times, came back up, and the second time that it went to do it, or actually the third time it went to do it, since it was crossing back and forth on the figure, I elected to close it at 03 just to take a small gain and walk away, and so far that's proven to be the right thing to do, although I'm still anticipating the breakdown. Now, it's sitting at support though. And when we're sitting on support, then arguably that is a long trade. You buy off support, you fade off the resistance, short off resistance. But this is different since we're in the transition. And this is different since the yen has seen a significant change in direction, potentially. Again, I'm anticipating that it should go down. I'm wanting it to go down. I would prefer it to break this support level because then we have some significant areas where it could draw down to. Again, 122, 120, 118, 116. I mean, there's a long ways to go down as opposed to going back up to 127, breaking above uncharted ground and probably running out of air again. Doesn't matter which way it goes as long as it goes, and in this transitional period there's plenty of trading range that we can take advantage of. But be aware of this, be looking for this, be anticipating this. It would be a very, very good thing if it breaks down, and if I am right in my assumption that a significant event has changed the course of the yen, at least for the short term, if not longer, then we have some significant pips to make on this pair. If you want to do this with me firsthand, open invitation. Come on the trade floor. Make the pips with us. See the trades that I'm taking and when and why and where I'm taking them. I call them out. I identify what we discuss them. We take them together. We trade them together. We make money together, and you can be a part of that. Your other invitation is to put any questions that you want, any comments or questions on these videos, and I will answer them in the subsequent video. You post a question, I will review. I will read your question in the video, and then I will answer that question, so I can make these much more informative and interactive, if you will, to engage you in these daily reviews a little bit more personally, and then ultimately being a part of what we do long term. I want to give you the opportunity. I want to share the knowledge that I have with you so that you can learn to be a better trader and start removing yourself from the herd and learning how to take advantage of the herd mentality that you are probably locked in. For most of you, this is a game of inches. It's just some slight modifications that we can do to your behavior and teach you to consider that can make a real substance and substantial and lasting difference. And that is the offer. It's a unique opportunity that I'm offering you, and I challenge you to find a better, more complete way to approach the market than the pure price and very simplistic proven strategies that I teach on a daily basis. So drop me an email, derekschimming@gmail.com. It's printed at the bottom of any of these videos, and again, post your questions and comments on the videos themselves, which I will answer, and get your invite and get on the trade floor and start taking a few classes with me and learning how to do this firsthand. Okay? I hope to see you in the room, hope to see your comments, and definitely hope to see your emails. And as always, You guys have a great day trading, and for the ladies in the room, again, happy Valentine's Day, girls. I'll see you tomorrow.